Investors are waiting for Federal Reserve's meeting after which they'll receive an update on U.S. central bank plans to wind down its stimulant pandemic measures, ahead of which gold prices have eased. Will gold prices increase in 2022? Keep watching today's video to find out. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. Before Federal Reserve's meeting, of which investors are waiting for an update on gold ease before the Federal Reserve meeting, that investor will be watching for an update. On Thursday, Bank of England increased interest rates first time since the start of the COVID-19, raising its main interest rate from its major low of 0.1% to 0.25% as inflation pressures increase in country. UK inflation hit a 10-year high in November as the Consumer Price Index rose by a yearly 5.1%, up from 4.2% in October, and well above the central bank's target of 2%. The bank now hopes inflation to stay at around 5% through the majority of the winter period, peaking at around 6% in April 2022. Meanwhile, the labor market recovery has remained robust, with staff added to payrolls in November. Indeed, after the end of the country's redundancy scheme. After the bank surprised markets by dodging a rate hike in November, numerous analysts had suggested that the coming data showed the economic conditions were in place to start straining. Still, many economists polled by Reuters anticipated the bank rate to be held at 0.1% going into Thursday's meeting, in light of the emergence of the Omicron variant and its quick spread in the UK. In the US, gold prices inched high as investors squared positions ahead of crucial central bank meetings this week, with the Federal Reserve likely to gesture the pace at which it may wind down pandemic-era economic support measures. The Federal Reserve could raise interest rates as early as March in the face of alarmingly high inflation, according to a senior U.S. central bank officer. Christopher Waller, a Fed governor, on Friday advocated the central bank's decision this week to accelerate how fast it scales back its asset purchase program so that the stimulant ends altogether several months before than initially outlined in November. The revised schedule would bring the stimulant to an end in March, soon after which the Fed should raise interest rates, he said at an event hosted by the Forecasters Club of New York. I believe an increase in the target range for the federal finances rate will be warranted shortly after our asset purchases end, he said. March is a live meeting for the first rate hike. He then added that the Fed could begin shrinking the size of its balance sheet by the summer. Although gold is considered an inflation hedge, interest rate hikes raise the opportunity cost of holding non-yielding bullion. Gold may be subdued in the first half of 2022 as the rate hike cycle kicks off. Commerce Bank said in a note, predicting gold at $1,900 at end 2022, about $200 lower than its former outlook. A positive demand outlook would lift silver to $26 next time, Commerce Bank added. Elsewhere, spot silver was up 0.4% at $22.25 per ounce. Platinum fell 1.7% to $926.50, and precaution dropped 4.8% at $1,676.14. For some time, gold has been trading near the range of $1,800 and in August 2020 has hit a record high of $2,075.47 when coronavirus-led slowdowns increased the safe haven appeal of precious yellow metal. In June this year, gold saw a pullback after Fed's hawkish tone wherein it iterated to scale back its asset buying as early as 2023 as against the earlier 2024. In 2022, gold prices will definitely touch the sky, and there's a possibility it may increase gold to $5,000 an ounce. So that's all for today's video. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.